The message for the real estate sector is pretty clear. We need to go to net zero, which means we definitely have to start building new stocks. We have to change our business models significantly. We have to tell our investors there won't be any returns any longer. Put your money into the buildings and make them energy efficient and reduce carbon. So we have to spread a lot of bad news. And the question is that really that bad? Or do we have any ideas to make it workable and still have some business opportunities and also some positive returns for the investors in this industry, in this sector left?
I think on definitions, I think that's a real challenge, and until we have a consistent definition, it's going to be really difficult for us to move forward as an industry. A lot of our investors have been involved in the further development and rollout of the CREM pathways, the Carbon Risk Real Estate Monitor. So we are sort of using the energy efficiency pathways really of those as a guide.
There's a lot of terms being thrown out there, as Alex said, net zero carbon, carbon neutral, and a whole bunch of others. What do they mean? And frankly, I think they mean different things to different people.
We've also been hearing from people, especially in Europe, they're saying, look, if you don't have a building that is approaching net zero and it doesn't have this ESG story around it, we're not going to be interested in buying it. So we're getting to a point where a lot of these assets could be stranded. So it's almost like we need to invest in making sure the buildings are designed and operating much smarter from the get-go, or retrofitted if they're an older building, because they're just not going to be attractive down it. So it almost becomes a cost of doing business.
The approach that I've seen some people take, which I think is quite a positive one, is a 2x or a 3x offset. So for every megaton or ton of carbon, the 200 to 300% in terms of an offset is done through preserving third world or developing countries' rainforest. I don't think that should be a default action, but it's certainly a wonderful way to enhance your portfolio.
And for urban development, because it has a scale, so we can build a total green city plan from the scratch. So there's a room for us to make use of the natural resources to plan more properly and efficiently. So we'll be able to select that green energy such as wind or nuclear to provide a green solution to the whole city with a cheaper rate.
We are development focused. We have over 10 billion of development ongoing right now, and there's a significant focus on next generation products, reducing our embodied carbon through the design, procurement, construction of those new assets. But in operational assets, we do ask our deal teams to now start looking to provide what is the baseline emissions for the assets which we're looking to buy. What is the underwritten CapEx, which is within our business plans? What is the abatement potential through the underwritten CapEx? And how does that align with us trying to get to net zero?
And we need to adapt our valuation methodologies with appraisers to better capture those benefits which are underestimated, I believe.
So everybody is looking for net zero buildings, but actually this is an answer is easy. New built buildings might answer that already, but our big challenge is the building stock, the existing stock, where our investors, they are part of real estate funds already. So the CO2 questions is actually more linked and more pressing in the building stock as it exists, and not, I would say, we are not solving our problem with new buildings here. And this is for Switzerland, actually, this is more demanding, because here in Switzerland, we are looking at 1.6 million existing buildings.
A lot of things we said again and again, but also in previous calls, but I think that was, for me today, that was really great. I really loved that. So back to you, and already thank you from my end.